My dividend stock and ETF portfolio pays me about $13,600 per year or $1,130 per month. That's passive income that I earn without doing any work. How much money do I have invested to earn that much? Well, I'm going to show you the two portfolios that I've built that pay me this income, and I'll share how long it took to get to this level. As appealing as this passive dividend income is, if I were starting from scratch, I would definitely do things differently. There's a lot to unpack here, so let me show you the portfolios and how I forecast future dividend income. Here's a look at my future dividend income, or my forecasted dividend income. That number I shared with you in the intro, this $13,636, that's how much I expect to earn from my dividend portfolio. I have two accounts that are feeding this dividend income. One is a M1 Finance account and one is a Fidelity account. These are both taxable accounts. I also have 5 different Fidelity retirement accounts that I'm not including in this. And so this breaks out my dividend income by month, and I'm looking at 2025 here. We got January through December, and this bottom number here, this 13,636 is the number. And then it's graphed out here at the bottom. I can also break it down by portfolio. So I have the Fidelity portfolio is bigger by quite a bit, but the M1 Finance portfolio is decent on its own. And so I can look at the breakout between the two different accounts here by month. And then you can even go down to the holdings level, where I can see which dividend I can expect to receive in any given month going forward. So March, you can see, was a pretty big month for me for both of my accounts. I received about $1,400, $1,469 here. Next month in April is a lower month. I'm going to get about $771. So I can unclick each of these and take a different look. So if I want to look just at Fidelity, I can see that I'm earning about $11,445 from Fidelity. And if I want to look just at the M1 Finance, I'm going to earn about $2,190. Now, M1 Finance has a view similar to this on their platform, which I'm about to show you. Fidelity doesn't have one, and it's frustrating because I know Schwab has one and M1 obviously does. So I'm using this stock Rover to consolidate both accounts. And I can look at all kinds of stuff with this stock Rover tool. It's extremely powerful. I can look at the various yields for these companies, or the trailing 12-month, the forward yield. You can see that Apple is a big piece of my portfolio, and it only yields 0.5%. And I'll show you that on the Fidelity side. I own Costco. I can break this down by either account, but I really like this future income look because it just tells me what I'm going to earn. You can also click this assume reinvestment box, and that's going to raise that dividend income. If I were reinvesting each dividend I received back into the security that paid it, that would increase this year and into next year. You can see assuming some dividend growth in here as well. Now, I'm not reinvesting these dividends right now, at least not in the Fidelity account, and I'll explain why in a little bit. But the M1 Finance account, I am reinvesting. So let's go into my Fidelity account. It's March 31st, 2025, and I've got several accounts with Fidelity, but I'm only sharing this one because it's the taxable portfolio that I've been sharing really since 2013 on my blog, retirebeforedad.com. I've stopped sharing it because it's not really an active account anymore. I don't invest a lot into this anymore. I've changed my strategy quite a bit, so it's not so much a dividend growth portfolio like it used to be. Now, I've been building this portfolio for almost goes back 30 years. The bulk of it has been the last 15 to 20 years, where the surplus from my income was always going into, first of all, my retirement accounts, but then anything after maxing out retirement accounts, if I had leftover money from my income, I'd put it into this Fidelity account. And before that, it was TD Ameritrade, and it might have been SureTrade at some point. There were a couple of different acquisitions over the years. I really like Fidelity as my primary broker. This holds about, I think, 47 stocks and 4 ETFs, and you can see my largest holding is Apple. Current value is about $93,500. I've owned Apple for, since 2012, 2013. I bought Apple, average cost basis $14 to $18. So I've owned Apple a very long time, and I have sold a tiny bit over the years just to diversify a little bit away from it, but it's been a great stock. As for its dividend, it pays a low yield. You can see my top 20 or so holdings. You can also see the total gains and losses here. My Apple stock is up more than 1,000%. I own several stocks here that are up more than 100%. Microsoft, 760, AbbVie, Costco. So I don't attribute these 100% gains to my stock picking prowess. These are gains because I've just bought solid companies and held them for some of these more than a decade. And I plan to keep holding a lot of them, but I'm going to divest some of these as well because I'm trying to simplify my portfolio, and I'm buying into more dividend ETFs or total market ETFs. And I'm taking some of this money, like some of the dividends, and I'm pulling it over to my Roth account because I can make Roth contributions right now. And instead of taking money out of my income, I'm just taking cash out of this account and moving it over to Roth contributions. So I'm not directly reinvesting this money back into these securities. I'm taking it out, putting it into the Roth, and then investing in the Roth using mostly total market index funds. So you can see some of my holdings. I'm not going to go through all of them. I've had Berkshire Hathaway for years. Costco's been a big winner for me. Some of the ETFs that I own, SCHD, people love this Dividend ETF on YouTube and other places. I own it. I've had it for a long time. I own a Vanguard Municipal Bond Fund. I own Vanguard's VYM, and I own Vanguard's VNQ, which is a REIT ETF. So today, as this portfolio is trading, it's live. I'm doing this when the market's open. Portfolio is worth about $496,000, and it pays me $11,445. So that yield is somewhere around 2.25%. And the big part of why the yield is pretty low on this is this Apple stock. I mean, Apple's almost a fifth of this portfolio, and the yield on Apple right now is like 0.5%. I ran the numbers. If I took Apple out of this portfolio, it would yield about 2.75% on the invested cash. Take a look at the dividend view, and I can sort this by yield. And there it is. Apple is my lowest yielding stock, and I own several other low yielding stocks. When I was actively building this portfolio, I was buying current dividends and dividend growth, sort of balancing out that portfolio. The Apple stock really took off and threw off the balance. My target was more around a 3% yield, and it's now about a 2.75 yield without Apple and 2.2% with Apple. I have no complaints that Apple has gone up the way it has. I'm going to hold that one. I'm going to hold a lot of these. Apple pays me, I think, $106 per quarter. So no complaints. So that's the Fidelity portfolio. Unfortunately, with this dividend view, there isn't that monthly chart laying out what your portfolio is going to pay. It does tell you the pay date for these stocks. I find the chart to be a lot more helpful. Let's go over to the M1 Finance portfolio. So when I log into M1 Finance, you can see I started building this portfolio in November of 2017. And I don't remember how much I was investing, but at some point around here in 2020, especially during the COVID time, I started investing a lot more money into this portfolio. Now, the way M1 Finance works is you set up these pies. You choose which stocks you want in the pie, and then you deposit money into M1 Finance. It automatically pushes the money to the pie where the allocation are set. Every time you add more money, it rebalances. So I have 5 different pies with about 5 stocks in each. And then I have this diverse income ETF pie that is equally weighted at 20% for each of these. What I've been doing for the last few years is just directing all the dividends from this account into this diverse income ETF portfolio because I don't want to be researching stocks. SCHD, there's some municipal bond funds, this HYMB, VTEB, MUB. There's a preferred stock income there, VYM. So pretty conservative ETF portfolio, mostly for income. And I am reinvesting the money into this portfolio. I'm hoping to get it to $100,000 at some point. It pays me, well, let's take a look what it pays me. So M1 Finance has this really nice looking chart, which looks very similar to the stock Rover chart. M1 has it built in, and I really think they took after Schwab on this. And I made a video about M1 and this new dividend view. I'll link to that in the description. But this does a really nice job of projecting when you're going to receive your income. So there's both the chart view and the table view for upcoming dividends. So I really like this. I don't know why Fidelity hasn't built this into theirs. Schwab has it. I'm sure other brokers have it. I'm using Stock Rover to combine the two. This portfolio has 19 stocks and 6 dividend ETFs or dividend heavy ETFs that have typically a higher yield. And my strategy going forward is just any dividend I get in this account, I just throw it into the pie with the ETFs. And as that pie slice grows, I'm going to raise the percentage of allocation going to that pie and just feed all the money into the ETFs because I don't want to be buying new stocks or really monitoring these stocks. I have sold stocks in this account. I think Leggett & Platt was one of them that was an original holding, and it's been a lousy stock. So I've sold a few where the businesses were just not performing. Most of these are blue chips that I'm very happy with, and I won't be modifying too much. So this account pays about $2,106. If I go back to Stock Rover and just look at the M1 numbers. It's pretty close. This one says 2,190, so they're a little bit off, but I like having the stock Rover view because I can look at both and I can analyze the portfolio as a whole having these two brokers. Now, I've liked M1 Finance over the years. I like Fidelity better, so I'll eventually move the money into Fidelity, and I have all these other accounts there. And if I add these accounts by clicking the various accounts. These are IRAs. I think there's a 401k in there, or 403b, a 401a, and a Roth, and a traditional, and a SEP. So when I add those to the portfolio, you can see that it mostly just pads this December timeline. Mutual funds distribute capital gains and dividends mostly in December. So I will get some dividends throughout the year. You can see the numbers here rise, but it really is that December period where the dividends and the capital gains come back. But I don't really think of my income portfolio with the traditional and the Roth IRAs, because those are more growth portfolios. They're mostly in index funds, both domestic and international stocks. And there's about 10% bonds in those accounts. Going back to the original question, how much money do I have invested? It pays me $13,600 per year, or $1,130 per month. And the answer is about $590,000 combined between the M1 Finance account and the Fidelity account. And if I run the math, I take the $13,636 and divide it by about $590,000, and that comes to a yield of about 2.3%, which is low for what I would expect to receive based on how I was building this portfolio back in the day. Stock market has been up. The S&P 500 has been positive over the last 2 years. When the stock market goes up, the yields come down, and when the stock market goes down, the yields go up, especially these blue chip stocks that keep paying their dividends over many years. So right now, the stock market's a little higher, and right now the yield is a little lower. And I don't mind. This is not a portfolio that I'm actively managing. It's just I'm kind of letting it go and actually taking money out of it. What is my strategy with this portfolio? Well, first, M1, I'm reinvesting dividends. In Fidelity, I have two strategies, really. The first is I'm actually living off some of this dividend income. Sometimes when our spending exceeds our income, I'm self-employed, so my income fluctuates quite a bit. And my wife makes a little bit of money as a preschool teacher 9 months out of the year. But whenever our income goes down, we do spend some of this dividend income. So I like to build up the cash. Right now, I've got about $5,000 in cash in that Fidelity account just sitting there. So I am spending some of this occasionally and trying not to, of course, when I can. And the other thing I'm doing is taking money out of the taxable Fidelity account and getting it into the Roth. Our income is still below the Roth threshold, and I'm doing Roth conversions. A lot of you have seen my Roth conversion video. I'm also making contributions to my Roth, but instead of taking it out of my income, I'm taking it out of these dividends. So if I earn $1,000 a month of dividends, I'm going to take some of that and put it into the Roth account, and then I'm putting that money into ETFs, very simple index ETFs, and just getting that money out of the taxable account and into the Roth account. The Roth is likely going to be the last money I touch with my retirement. So the more money I can get into the Roth, the better. That's how I'm doing it right now. The only stipulation with transferring money out of a taxable account and into a Roth account is that it must be cash. You can't transfer shares of a stock or an ETF. You have to sell the stock or build up cash through dividends, then transfer the cash over to the Roth. And I've actually set this up automatically where I'm just collecting dividends and then sending a portion off to the Roth on the 15th every month. And then on the 18th, I set an automatic investment for $500 or whatever it is I transfer over, and then set it up on autopilot. So I'm automatically taking money out of the taxable account and into the Roth, and then building the portfolio there. And that's always been my strategy, just taking surplus income and getting it into tax advantage accounts. Just nowadays, without a full-time job, I don't have as much surplus income. So I'm taking it out of this account, and it's better off there in the Roth for the long term anyways. I started building this dividend portfolio back in 1995 when individual stocks were the only option for someone investing small dollar amounts. Otherwise, the commissions were too high. I used dividend reinvestment plans, or DRIPs, to invest. And I was investing through the mail, sending checks. When online brokers became available, I would save up about $1,000 to buy large share lots of individual stocks to lessen the impact of trade commissions. Today, if I were starting from scratch, I wouldn't buy individual dividend stocks. I'd invest in either total market ETFs or dividend ETFs if I wanted to raise the yield. And I'm doing that today. I'm slowly divesting of these stocks and putting the dividends and sales proceeds into ETFs or Fidelity index funds. I have no regrets about building out this stock portfolio. It was a hobby, and an escape from my full-time career at the time. And it serves me well today, paying me these dividends. But at some point, I realized I didn't want to be researching and monitoring stocks in retirement. So starting around age 47 or so, I began simplifying my stock portfolio. And by the time I'm fully retired, I expect to own maybe 25 individual stocks, and I'll continue to hold many of these well into my retirement. But these are blue chips like Coca-Cola, Apple, Johnson & Johnson, stocks that don't need a ton of research every quarter or even every year. I'm a buy and hold investor, and it shows. Many of the stocks I own are up more than 100% over the last 10 to 15 years. As your investment horizon expands, your chances of investing success increase. Don't forget to subscribe to my YouTube channel, and there's a link to sign up for my free newsletter in the description. I'm Craig from retirebeforedad.com. Thanks for watching.